Hey everybody, this is Scott Bauer, and I want to go through a quick video here on how we use some of the indicators that we use to help us determine when to put out a trade signal. And some of the favorite indicators that I use are the red and the blue lines that you see on the screen here. And let me get my drawing pen. This red line right here, that's the 50-day moving average. This blue line is the 200-day moving average. And when you use moving averages as an indicator, what they're really doing is taking into consideration historical data, what has happened in the past, to help us predict what may happen in the future. Now, I want you to keep in mind, there is no indicator, there is not a single indicator out there that is the Holy Grail, that is absolutely for certain going to tell you exactly what the stock is going to do. So if anybody ever tries to tell you that, you should run as fast as you can. Our goal is to really use indicators that we know have worked a majority of the time in the past to help us make a decision moving forward. So in the case of STX here, if I point out to you, each time the stock had dropped down to the 50-day moving average here, boy, it turned out to be a buy. So when we got towards this one right here, we put out a bullish upside signal. Now, you'll see, stock did not absolutely hit right at the 50-day moving average, and that's never going to happen, guys. We're never going to absolutely, to the penny, hit a signal in terms of, all right, we want to buy it here, sell it here. Okay? That's just not reality. But we were preparing. We were in front of the move, getting ready for that. So we put out this bullish signal right here. And here's actually the signal that we generated. This was a bullish diagonal call spread in STX. Now, we'll explain in another video what a diagonal spread is, but for right now, suffice it to say, this was bullish, looking for an upside move. We wanted the stock to obviously rally. And that's exactly what it did. Now, did we know, could we predict that we would see this big gap here? No, of course not. That just doesn't happen. However, we could, again, using these indicators, make the prediction that there was some sort of probability, likelihood of a move higher. So how did we manage this? What did we do? Well, as the stock started to move higher, we took some partial profits off the table. And you can see here, this was a partial exit signal where we sold this position on the move up for $1.60. Remember, we got in at 95 cents. Okay? Now, another lesson here real quickly is, as a trader, your biggest goal, your biggest goal is to be a good risk manager. We're all managing our risk. We need to all the time. So we took some profits off the table here. And as you can see here, the stock continued to move higher. So what did we do here? Well, then we sent out the remainder exit signal, which is right here. And we sent this out. The stock had rallied so much to sell at your discretion. Well, we sold this thing out for about $3, the remainder of our position. Remember, we got in for 95 cents. Okay, so one lesson for sure on every trade you may make, something that from my days back on the trading floor back in 1991 till today that I live and die trading with, is bulls and bears prosper, pigs go to the slaughter. Means don't ever be afraid to take your profits off the table. Don't swing for the fences. Don't go for that home run, because you're going to strike out more often than not. So again, what did we do here as a wrap up? We really looked at this 50-day moving average as a solid indicator to help us make a decision that helped us make profits on that move up in STX. All right, thank you so much for listening in. Really appreciate it, and I'll see you on the next one.